Hello and welcome everybody to the Gold and Silver Club Commodity Markets Outlook for the 17th of March 2016, presented by myself, Phil Carr, at the Gold and Silver Club. So today we will be analysing the latest developments in the commodity markets. We'll be discussing our outlook for the week ahead. The live session will be covering an overview of the commodity markets. We'll be reviewing the top trades of the week, live market commentary, trading ideas for the week ahead, and of course we'll keep it nice and interactive. So any questions, guys, regarding the charts, the different markets that we go through today, the commodities, please do put those into the Q&A and we'll cover those during the course of today's session. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinion on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels, publications including Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal. Of course, it's great to be here on FX Street today. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth, generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please do feel free to visit our website, which is www.thegoldandsilverclub.com. Right, good. Right, we'll move it over and we'll have a look at the price of gold at the moment before we look at our top trades of the week. Gold is currently trading at 1,266 US dollars per ounce. We'll take a look at that very shortly on the charts. We had the FOMC announcement yesterday, which we'll go through with you very shortly as well. Before we do so, we'll go through the top trades of the week. Now, this time last week, we had the ECB announcement and the meeting, so we didn't get a chance to update you on our trades the previous week. So I will go through the swing trades that we've had on the earlier part of March as well, which we continue to be in as well. So let me talk you through the trades that we've taken using the Gold and Silver Club signature trading strategies this month. So first of all, we mentioned that we took this Brent crude oil swing trade going back. This was the breakout trade that we had on the non-farm payrolls on the first Friday at the beginning of March here, which has continued to follow through really well. We had a 390-point trade on that. We continue to be long oil at the moment. We saw a big gain yesterday, a 5.8% gain on oil to the upside just yesterday, which I'll go through in more detail with you. But oil has continued to move really well. Soybeans, we hit our profit target at the upper end of resistance here for 310 points profit once we got a nice bounce of support, followed through and hit our profit target. Also fundamentals very supportive for this trade. And gold, our swing trade on gold delivered really well, over 320 points profit once we broke out of the pennant formation. Gold has continued to find resistance around 1,280 US dollars per ounce. Interesting move yesterday on the FOMC statement. We did see a 2.5% move to the upside. Trading overnight was a bit muted on gold as we saw equities and also oil rally overnight. So we'll take a look at that on the charts very shortly as well. So what I'll do, I'll move over to my technicals. I see that the Philadelphia Fed Manufacturing Index and unemployment claims has just come out, so I'll just bring that data on board. I see US dollar is just retracing at the moment, so we just see how those figures came in. Okay, right, gotcha. Okay, so we'll have a look at the technicals now as well. So interesting, gold has pulled back a little bit on that. US dollar has retraced. So first of all, let me actually show you the US dollar index at the moment, because this is very relevant to where we're sat in context of the price right now. So the US dollar index broke down significantly over the last couple of sessions here, particularly on the FOMC statement. Yesterday, we saw a decline on the US dollar, this morning as well. You will note we've just had a bit of a retracement now. Philadelphia Fed Manufacturing Index has been come out quite a lot stronger actually than anticipated. So we're seeing a bit of a retracement on the US dollar at the moment, and I can see gold is pulling back a little bit off that as well. The unemployment claims have come in close to target, but the Philadelphia Fed Manufacturing Index is certainly positive. Right, so we'll have a look at that on gold very shortly. The US dollar index right now, the sell-off that we've seen over the last couple of days, it is overextended to the sell side. So just be a bit aware of that we could get a retracement today. We have come in to a major level of support on the US dollar index. If you have a look at the context of price here, we haven't had many closes below this key zone, particularly going back to October last year. And in fact, each time we have closed below the 294.70 level. It hasn't stayed below those levels for long. We've had a fairly significant pullback over the last couple of days. I would suggest we are overextended, a bit of a retracement, at least at the moment, on the US dollar index. Now let's move it over to gold. And gold, for me, the price structure is very interesting. So yesterday, the US Federal Reserve, they decided to keep interest rates steady at the two-day Federal Open Market Committee that ended yesterday, March the 16th. It said it expected the US economy to continue to grow at a moderate pace, but that global risk remains a central bank. Also said it expects only 2 potential rate increases, down from a forecast of 4 in December. So that's quite significant. We certainly saw some big moves off that. Gold rallied 2.5% yesterday, added pressure to the US dollar, which you can see in the US dollar index. It was gold's biggest one-day rally in 5 weeks, but we did see gains just capped overnight as we continue to see US crude oil move to the upside, and also the precious metals safe haven appeal waned a little bit overnight. So there are some interesting factors to take into account in gold at the moment. Number one, we did bounce off a very key level yesterday. We did bounce off a Fibonacci retracement level, and you can see here we're finding support at 1,223 US dollars per ounce. So we did get a bit of a supported bounce on that yesterday. Now we are definitely ricocheting between support and resistance at this level, where we're getting a bit overextended on the daily. I'm not looking at new trades right now for gold at the moment. I really want to see how the overall candle structure forms over the course of this afternoon. Now, I would put something on your radar. We're not fully there yet. We're not fully there, but we have been looking at this over the last week, the potential for it to develop on gold. And I'll put it on your radar. I know gold has had a very strong year so far, up 23% year to date. We've seen some incredible moves to the upside, but we are getting to a point now where over 3 months worth of strong rallies to the upside without any significant corrections on gold. I'll put something on your radar at the moment, which is the potential, only the potential. We're not there yet, but this is potentially the right shoulder in a head and shoulders formation if gold cannot breach above its swing highs over the course of this week. So if we cannot get follow through after the FOMC statement, if the US dollar starts to retrace today, if we can't get above 1,282 US dollars per ounce, you've got the beginnings of a head and shoulder correction here on gold. You've got the left shoulder, the head here, which we produced last week. We had a few failed moves above 1,280 US dollars per ounce last week. After the ECB announcement, we saw a nice rally into the Asia market, the Asia Pacific session. However, it didn't follow through. We then saw a pullback on that, and we continued to pull back into the FOMC statement. We saw a 2.5% gain to the upside yesterday. Today is an important day as to whether gold will continue to follow through. If it takes out last week's highs, it opens up the gates here to 1,300 US dollars per ounce. However, if it has a failed move here, if this is going to be the high of the week and we start rotating lower, if gold starts to give back some of its gains from yesterday from the FOMC statement, if the US dollar index starts to retrace and get supported around these levels, that would potentially start to set the stage for a correction here for gold into next week. It's just something to be mindful of. I'll put it on your radar. Head and shoulders formations are not confirmed until the neckline gets broken, but so far it's playing into this formation. I've had this on the radar for about two or so weeks now, the potential for this formation to develop, and I would just have it out there so that you are aware as well. If you have long positions on gold right now, just be aware of the potential that it could correct in the weeks to come. But we're not quite there yet. So gold right now, yeah, you can see it's pulling back already on that positive data from the Philadelphia Fed Manufacturing Index. We can see a bit of a doji developing there on gold. I'll move over to oil very shortly. It's been a nice bounce yesterday. If you caught the 2.5% move on yesterday, the gold move to the upside, well done. It was a good little breakout trade to the upside. So far, I'm putting back with a bit of a doji to be decided this afternoon. Overall momentum is certainly strong. You will note that gold has not pulled back more than 3 days in a row of consecutive lower highs and lower lows since this bull market rally since the beginning of December 2015. So it's been a good first leg up so far for gold over the last 3 months. But we are getting to a point where it is getting a little bit overdue a correction, and it hasn't corrected much at all. It's just come back to 23.6 Fibonacci level yesterday. So with that in mind, I'll just double check if there have been any additional questions on that. No, that's good. Okay, right, we'll just move over. And now we'll go over to oil. I want to cover oil in a little bit of detail with you here. We'll go over to the data first on oil. Essentially, we did get a nice breakout to the upside on light sweet crude oil yesterday. Moved over now to the May contracts. So oil futures, they extended strong gains overnight during the Asia Pacific session. They gathered support after the world's biggest supplier. They firmed up plans to meet and discuss an output freeze on the 17th of April. So that's super important in terms of the date which has now been confirmed. Since the freeze was first proposed last month, prices have recovered 50% from the decade level lows, but have been volatile with a firm date for the meeting due to be scheduled. So that date has now been firmly put into the diary for the 17th of April. Oil producers, including Gulf OPEC members, support the current freeze in talks that will go ahead next month on a deal to keep production at current levels, even if Iran declines to participate. So you might remember we pulled back earlier on in the week due to Iran essentially saying that they would not support a freeze until they doubled their production levels to pre-sanction levels, which was a bit of caused a bit of a pullback on oil earlier on this week. Okay, OPEC sources said on Wednesday a meeting would increase the likelihood of the first global supply deal in 15 years. So with that, we saw crude oil gain 5.8%, US crude oil gained 5.8%. Yesterday erased all of the losses from Monday and Tuesday, and also Brent crude oil rallied 4.1%. Also, the oil inventories yesterday. So the Energy Information Agency, they provided the crude oil stock inventory, and that rose by 1.3 million, but it was much smaller than the 3.4, which was expected by analysts. Okay, so we came in under what was being predicted and forecast, and that was bullish. We saw a breakout yesterday on oil as a result. Also, we saw oil rally overnight after less hawkish US monetary policy outlook. The US Federal Reserve held interest rates steady and indicated 2 rate hikes this year instead of the expected 4. So ultimately, we are at the moment, we are bullish oil. In the short term right now, we do have positions which we continue to be in. Swing trades on oil, we've broken above key resistance. I see some clean air here for a further rally to the upside. So for those of you who've been on our sessions for some time now, you will know that we took this breakout to the upside, which actually fully confirmed on Friday, the 4th of March on the non-farm payrolls. We continue to take that breakout to the upside. It's been incredible moves. It's moved about $6 to the upside, 600 points since then. And we've had another consolidation over the last week, and now we've broken out to the upside again. We're currently above yesterday's highs here as we continue to build some momentum. I'm looking for clues during the US session today as to whether we'll continue to follow through. Usually oil really starts to pick up momentum during the US session. The oil rig counts, which come out on Friday as well from the Baker Hughes, have been supportive in previous weeks for oil. And we've also seen an increase in the number positions, certainly from the CFTC reports have indicated an increase in net long positions from money managers and hedge funds towards the close of last week. So all of these factors have remained supportive for the oil market. So we'll see how this follows through over the course of the day. I would like to see a break and a close above last week's highs here as we move into the close. You can see so far we've got a break and we've broken above last week's high, but I would like to see a close above these levels as we continue to build momentum here on oil. So we'll be watching that very closely as we continue to develop into the US session this afternoon. I would also put on your radar silver. Now, silver has had quite a few attempted rallies above major resistance, which really haven't followed through. There seems to be there's really a big cap on silver at the moment, sitting around $15.77 down to $15.70. If we can break and close above resistance today, this pennant formation will show us that we're starting to build the next leg up here. But if we have a failed move at this resistance, if we can't penetrate and break above resistance here, I would expect silver to then pull back and rotate back towards the lower end of this pennant formation. You can see silver struggling a little bit today. Really, everything is dependent on the US session to see this afternoon whether we do see follow through here for the metals or whether they pull back further, whether they're just going to encounter resistance. We're seeing gold really find a lot of resistance at 1280. And silver currently is finding resistance between 1560 to 1577. Platinum, also similar situation, had a nice move yesterday, is coming up to key resistance, sitting around 985 here, 985 US dollars per ounce. It did get a nice bounce off key support levels off the lower end of its trend channel just yesterday, remains supported at those levels. I want to see if it follows through during the US session today or if it starts to roll over. So for me, it's very important this afternoon to see whether the metals can continue to sustain the rally they put in yesterday, or whether they're just going to run out of steam and we're going to see capital flow back on to into equities here, and also back into the energies as well. Now, I was looking previously at the VIX, the volatility index, get a bit of an idea of where we're sat in the context of fear in the market, and we are on risk on at the moment, risk on conditions where traders are happier to take risk on equities essentially at the moment and stocks, and we're continuing to see the fear in the market measured by the volatility index drop. Okay, so these are the levels that we had earlier on in the year where we saw the stock markets declining and breaking down significantly over January and February, which are marked by extreme volatility and also by heightened fear in the market. This is the top of the VIX, which was produced back in August, where we had the Black Monday for the stock market, where we saw huge moves to the downside in August, which was inversely correlated to the VIX breaking out to the upside to 5-year highs here with increased fear in the market. So you can see fear is dropping as the traders are more on for taking additional long positions on equities right now. The Dow Jones, in fact, has had quite a decent move to the upside, and so has the S&P 500. I can just show you both those markets just to give you an idea where they're sat in the context of price at the moment. We do have some overhead resistance here, but ultimately we can see that the S&P, particularly the Dow Jones actually as well, they are building a base here. They've been grinding higher, and also you've got that correlation with oil, the breakout to the upside with oil yesterday was also favorable for equities. So for me, again, it will be quite important to see how these close over the course of the US session today and looking at these intermarket correlations. Okay, so we will continue to watch those and monitor those very closely. Right, moving over to now have a look at the grains. I just want to talk you through some of the moves that we're seeing at the moment and that we've had over the grain market. So we continue to actually be in our position at the moment, which is a long position on corn. So we've entered into this on a breakout. We came right up and breaks above a previous resistance channel, which we've been consolidating in since the beginning of the year here in January. We continue to move just between support and resistance, coming down to the lower end of the trend channel and rotating back up to resistance. Now we finally got a break. We had a number of factors here. We had overhead resistance, a few key moving averages, the upper end of a trend channel, fundamentals and data supporting a breakout with corn. It's been a good move so far. It is coming back towards the upper end of its trend channel. We've continued to be in a swing trade here with the grains. We've mentioned this on previous analysis that we've done here on FX Street, that we were looking at buy opportunities on the grains, particularly here. If you have a look at the soybeans market, you will note where we came all the way back down to the lower end of this supportive channel, bounced off it yet again. Soybeans is moving so well between its major support and resistance channels. It's coming up for a retest of a key level here, the 900 level, which previously has seen some resistance here for soybeans. If we do get a break and close above major resistance here by the end of the week, I will be looking at some additional buy opportunities. I would like soybeans to ultimately break above resistance, come down, retest resistance, provide support, and spring higher here. In terms of bear markets at the moment, soybeans ranks right up there in the top 10 all-time bear markets. If you go out to much higher time frames here on the monthly chart, where we've been in a bear market going back to 2012, the significant move that we've seen to the downside, we are coming off major lows at the moment, where we could really start to ramp up to the upside over the course of 2016 for longer term positions and swing trades. And what I would like to see for evidence of this is a breakout of resistance, come back and retest resistance, turn support, and then offer more trading opportunities to the upside. Wheat is also another market you want to have on your radar here. Again, we've had a lovely move since we came back down to the lower end of this support channel. We very quickly, especially on the new contracts, the May contracts, we've very quickly moved back into its supportive channels here, and it continues to build a base at the moment. You've got on the higher time frames a nice V-shaped reversal pattern developing as well. Our preference right now is corn, which we continue to be in this trade, but we are looking at opportunities to re-enter on soy and also wheat in the weeks to come. Coffee, you definitely want to have coffee on your radar. It's been a while really since coffee has been able to break out of its major channels here. You'll see the last time that we did this was back in December 2013, where we continued to follow through in a big way after we had a break above major technical levels and supported by fundamentals. You can see at the moment, this week has really been the first week for coffee where it's significantly closed above a trend. It's been in this overall channel, ricocheting between support and resistance for really the best part of a year now, where it's just rotated between resistance and support. This week has been the first week in a year that we've had a confirmed break and a close above that level, and now we will look at buy opportunities here for coffee. We wanted to get a resolution at this zone. We in fact had a lot of the move yesterday, and you can see it's still following through today in a big way here on coffee. I'm looking at pullback opportunities as buy opportunities as well, particularly on the weekly. If we come back and retest the trend channel providing buy opportunities at this zone, we pull back, we'll be looking for the next opportunities here, as we seem to be basing here with coffee. Been a tremendous move over the last few days here, so watching that very, very carefully as we close the week here and as we head into next week as well. It's definitely going to be on the radar and a market that you do not want to miss over the course of today. Okay, right, we'll take it out. We'll also have a look. We'll have a look at Brent crude oil, and we'll have a look, just go into a little bit more detail on just a couple of questions which have come through on the metals as well. So if we go over and have a look at Brent crude oil, essentially light sweet crude oil, we favor slightly over Brent at the moment. It's been the first mover. The momentum has been better on light sweet crude oil than Brent. At the moment, Brent, you can see it's come right back up to key resistance at 41.44. It's retracing a little bit, didn't quite manage to breach and break above that level. It has, however, started to build a nice little base here. It looks like what we could be in for in the short term here. It looks like we've just got a pullback here, which is you can see here, bullish flag formation, where we've just pulled back. We haven't taken out any of the previous swing lows. You've got a nice underlying trend channel here for Brent as well. Looks like it's just a short-term pullback, and we're starting to build to higher prices. I would like to see how Brent closes the session. For more momentum here, I would like it to at least break it, well, at least close above yesterday's high, and ideally if it breaks above the resistance, weekly resistance here, and follows through with a break and a close above 41.44, that bodes well for the bulls here. We could see more upside momentum. Really, oil will tend to get going during the US session today, and also the Baker Hughes report tomorrow will be important as well. Same factors also relevant to light sweet crude oil. I see light sweet crude oil as the better trade at the moment. The overall momentum is better. It's been the first mover, moved 5.8% to the upside yesterday versus Brent crude oil, which moved 4.1%. But both markets are definitely worth having on your radar. Now, we'll just move over to some of the other softs as well. Now, another market which I want you to also just be aware of at the moment is sugar. Sugar's had a tremendous move so far this year. Off the lows of February, it's moved over 40% to the upside. For me, it's coming into a very critical area of resistance between 15.60 up to 16. Okay, if you have a look at the weekly charts here and go, in fact, we'll go right over to the much higher time frames. The monthly would adjust this trend channel ever so slightly. You can see where it's starting to break above it. However, if we were to close back within this channel, there is the potential also to rotate lower and again have another rejection of this zone. The strike zone here, where I'm looking for evidence that sugar is not going to follow through, is between 15.60 and 16. If we get a break and a close above this level, we break above this major trend channel on the weekly and the monthly charts, we close above those levels, sugar is really setting the stage for a very strong leg up here. So we're watching this very carefully. We're coming into strong daily resistance at 15.78. Sugar is a great market. If you don't trade sugar, it's a fantastic market to trade. Really tight spreads in it, moves really well. Liquidity is good on it. So I definitely want to just put that on your radar. But sugar at the moment for me is a market that you absolutely want to keep an eye on right now as we come up to this major level. Sugar's been an incredible mover. We've caught a lot of this move off major support to the upside, as you'll note from previous sessions that we've discussed. But at the moment, the current move right now, we're on the sidelines waiting for the next trade setup here on sugar. But I would absolutely have sugar on your radar at the moment, as it is likely to provide trade opportunities over the next week or so. Okay, fantastic. Due to the clock change in the USA, guys, today's session will be cut ever so slightly short, as we have another session coming up right after us, guys. So what I will do, if there's any questions at the moment, I will go ahead and take those. Just as a bit of a trading plan throughout today, what we're ultimately looking at as we head into the US session today, I want to see whether we get follow through on equities and also on oil this afternoon. So you will note light sweet crude oil in particular particular, it broke above major resistance on, you can see, broke above the weekly highs, broke above yesterday's highs. I'd like to see during the course of the US session today, if this follows through, there's a fair amount of clean air above here for oil to follow through. If it continues to, especially if it breaks and well, actually more so closes. If it closes above the last week's worth of highs here, I could certainly expect more upside. It's got a lot of clean air for a nice move up to around the 43 US dollar level at the moment. So I'll definitely have that on your radar. For me, gold and silver this afternoon, there are important decision points here because they're coming back up to major resistance where they've been ricocheting between support and resistance over the last week and a half. Gold's really struggling with 1280. If it can break and close above 1280, it bodes well for the next leg up. It is getting overextended with the overall move that we've seen so far this year. We haven't really had a decent correction to the downside. We did come down for a shallow correction to the first Fibonacci at 23.6. I want to see if gold can continue to follow through during the US session today, or whether it's going to start rolling over and potentially have the start of a head and shoulders pattern. It's just something to note at the moment. This could be the right shoulder. It's a little bit too early to tell at the moment, but I'm watching this very carefully as we head into the US session this afternoon. Continue to be bullish on the grains at the moment. So we've got positions on corn in particular, but keeping an eye out for more upside on also wheat and also soybeans. And then I would definitely draw your attention to sugar and coffee, which we're looking for opportunities as we head into next week as well. So we're looking for our strike zones to be hit and for trade opportunities at those key levels which we mentioned. Okay, fantastic. Good. Right. So I'll just take you back to the presentation, guys. And there is, of course, an opportunity for you if you would like to get access to our portfolio, our management of our portfolio, the trade management around those, the live trades that we provide at the Gold and Silver Club. If you would like access to exclusive daily commodities analysis, our live trade ideas ready to implement at the Gold and Silver Club, you can get access to that via our private members live trading room. Now, it works as follows. As a member of the private members live trading room, you get access to exclusive weekly live trading room webinars. So we host live trading rooms throughout the week, which you can join those sessions. We provide live trade setups ready to implement, which include our exact entry levels, exit levels, take profit on each trade. You get real-time trade notifications with all of the trades that we are taking, including trade management of those. You get exact details of where to enter, exit, and place our stop losses. We provide you with exactly what we're doing on commodities, live interactive Q&A via weekly webinars. You get a week ahead market focus video every single weekend, providing you with a trade watch list for the week ahead, which is gold dust, personalized trading plan tailored to your trading goals as well, access to ongoing mentoring and support, and you also get institutional level trading research and market analysis. So if you would like to take your trading to the next level and join us at the live trading room, essentially all you need to do is go to www.jointhegoldandsilverclub.com. membership, but it is by application only. Once you've completed the application form, we'll get in touch with you ASAP. You're also more than welcome to just call us directly at either our UK office, our USA office, our Africa office, or our Asia office. Our UK number is 0207 193 0403. Our USA office is +1 646 808 0403. Our Africa office is +27 11 083 8403, and our Asia office number is +852 8191 0403. I really look forward to working with those of you who will be making an application and joining us at the Gold and Silver Club. And again, if you just want to complete the application form rather than call up, it's just at www.jointhegoldandsilverclub.com. Okay, fantastic. So I shall leave those details for everybody there. As always, guys, good trading for this afternoon, and we'll, of course, wish you a fantastic weekend. And we look forward to working with those of you who will be joining us at the Gold and Silver Club. Okay, thanks, guys. Take care, and we'll see you on the next one. Thanks, everyone. Cheers. Bye-bye.